A very good evening to all our mentorship traders. Tonight we are on the 8th of April. It's a Friday evening, 8 p.m. Indian Standard Time. Like always, the usual mentorship session. We'll take a look at the Nifty Bank Nifty from a short-term and from the weekly charts perspective. And then later on, we'll talk about stocks which are there in your portfolio and the ones that you're eyeing next week to trade. Now, the weekly charts first. This is the Nifty near month futures, and the index has managed a pretty decent bounce back over the last 5 weeks on a low to high basis. If we calculate, then we are looking at around 16.13% bounce back, which is pretty good. See, the market topped out here at this juncture. This was the first leg of the fall. This was the first bounce back. This was the second fall. It was essentially a three-legged correction, and now the bounce back. If we compare these two bounce backs, one and this one, then clearly we will notice that this current 5-week bounce that we have had is far superior. This was 11.5%, and right now we are this current bounce back is more than 16%. So the bounce backs in a downtrending market, the magnitude of these bounce backs have increased. They are much more than the previous falls, which clearly gives the signal of positivity. The weekly charts, the long-term trends in the weekly charts are fine, not a problem at all. But yes, over the last couple of months, 3 months, we've had a bit of correction for which the moving averages have started to crisscross each other. Pure, simple trend line analysis will definitely let you draw something like this, no doubt about it. And yes, we can actually drop a parallel like this. This is more of an exaggeration. If you turn it into a line chart, you will get a nice fit. And so this is, you can say, a mildly falling channel within which the index is trading, and it needs to take out the breakout above 18,200, and we should be scaling further up. So far, so good. The momentum indicators and the other signals seems to be fine, not a problem. The daily chart will offer us short-term supports, which is around 17,500. 17,500 essentially was the previous resistance, which was this zone. And now going ahead, once we get good breakouts, when they come down, they should face support. And 17,500, as long as it holds, this move seems to be intact. This move seems to be fine. And one should continue with the bullish bias. This week, the mid 3 days, I think these 3 days led to a correction which took the index down to the level of 17,656. And today we got a very nice bounce back, participating, the banking participating really well. The large cap stocks overall, Nifty 50 stocks actually played a pretty good role. Strategically, no need to go contrarian bearish right now, no need to short stocks, maintain the bullish bias, and look to trade primarily on the upside even next week. Bank Nifty, which picked up very good momentum recently after the 2 days of correction, is now on the verge of another move. In fact, Bank Nifty, I feel, can give you a pretty good move above this high. The level is around 38,180, so 38,200, and you have a fresh breakout in your hands. On the downside, 37,000, as long as 37,000 holds. On the downside, your possibility that this index will further extend itself further on the upside is highly likely. So 37,000 for the Bank Nifty, 17,500 for the Nifty, maintain the bullish bias. Sectors played out a decent role in today's trade also. This is Friday's behavior, and metals are performing really well, extending itself. We can see a 2-bar divergence very clearly. And so I feel that any position in the metals pack from here on should be one should be aggressively trailing the stop losses to protect the open profits. Try not to chase the metals from here on, because if we see any kind of slippage over the next couple of trading sessions next week, then metals might slow down, might. It's very difficult to call these tops, especially in this kind of a strong market. We have seen what has happened with ITC. The stock just rallied one way up. Big move coming in today, almost 4.5%. We don't see these kind of moves from this stock. At least we have not seen these kind of moves from this stock over the last, I think, more than a year or so. So it's very difficult to call the top. So I would suggest and request not to go contrarian short in this market. It's always better to go for short-term breakouts. The momentum, the underlying trend is on the upside, and any stock that you find which is on the verge of giving you a nice move should be used. That kind of a upside breakout should be used to go long. Amongst the top 15 stocks, most of them are in a fresh uptrend. Look at Larsen & Toubro next week for a breakout above the recent high. ITC is already extending itself really well, so cannot chase ITC or Hindustan Unilever. Amongst the banking, you can eye iBank also, but Larsen so far looks really good for a nice move. It can give us a fresh breakout. Reliance has picked up a little bit of a bounce back. The correction in Reliance was due to this negative divergence which we discussed, and I think the correction is over and the stock should be ready to further participate. Maruti is not participating in this bounce back. It extends the fall. It needs a big move above 79, 79.50 for any kind of serious upside. Amongst the rest, amongst the four-wheelers, I think Tata Motors is in a much better position next week. Look for a move above 460. And so stock-specific movement, sector-specific movement will stay, and a trader will continue to get opportunities. Stick to the long side of the market.